Welcome to Day Trading with Steve. Today is December 16th, 2020. Take a look at some stocks here, see if we want to get a purchase here. I've already been looking at this stock, so I'm going to jump in 500 shares, about 10 bucks, looking for a move up. I'm just looking for a few pennies here. 5-10 cents will be just fine with me. A lot of times when I'm trading, I will flip over so you guys can look at the indexes I follow. So I follow the SPY. So that shows the overall market. Kind of gives me a snapshot on what's going on. So if I see an upward or downtrend on the overall markets, it lets me decide what's going to happen with my stock. So what's going on today is I'm actually in the simulator. Check out the upper left hand side of the screen. It says simulated trading. As you guys know, Thinkorswim does have a simulated trading platform. Once you sign up with TD Ameritrade, this is one of the options they offer. Sometimes I trade in simulation for multiple reasons. Usually it means that I'm going through trading rehab if I'm in that, or it means the markets are sour and me and all the other traders are having a hard time making money day trading, so you will find me in the simulator in those scenarios. So what this stock's done, it was in a upward trend, had a small dip. Looks like that dip was associated with the overall market trend, and it's continuing to move up. Sometimes these are dangerous trades to get into, as it won't want to move past the previous high. So you get yourself a double top and it'll drop down. Looks like that's what we might be seeing right here. We'll see how far it drops out of this new upward trend line that we're into. But it might be one of those things where as it slips down to say 9.95, we would be able to buy some more. If we can get 100 more shares, if we can get it to move up another 5 cents, we'll still make a little bit of profit. We'll see how this one goes though. Looking at the markets here, it looks like it's kind of choppy right now with a downward dip. It looks like our stock is taking that downward dip too. Down about $52 on this trade. For those that have been trading lately, it seems like ever since the election, the market's been a little iffy, a little choppy. A lot of the patterns that people were relying on to trade are not really seeing that follow through that we're used to seeing. So what you'll get is you'll identify a pattern that's pretty well established as a good pattern to trade. So all the fundamentals are there from a day trading perspective. You see it, you jump into that trade, and you don't get that follow through. That's what we've been seeing lately. That's why I'm simulated trading today, waiting till I'm in the simulator and I'm consistently winning, or my average is more than 50%. Then I'll get back into the markets with real money. So I've put a limit order out there. So what I'm thinking here is as the stock potentially drops down maybe to 9.90, I would expect it to be within a 10-cent range. So if we hit the bottom of that range at 9.90, that'd be buying at the bottom for a move up. Even if it stops at what I'd call a breakout point at $10, we still would get 9 cents, which wouldn't be too bad. So we did get filled. It looks like it dropped down to 9.90, and I got filled at 9.91, which is where I was looking to get filled at. Just hoping now that we're looking at the bottom, so you see the cross candlestick forming, indicating indecisiveness and usually the bottom of a trend. So we're sitting on a downward trend for the past 5 candles. Hopefully this is the bottom, and I've purchased the bottom. We can move right back up towards 9.99 or 10. As we approach 9.99, I'll be looking to phase out of my holding of this position. So this stock's starting to show some indecisiveness. It looks like the pattern's developing to kind of be a sideways moving. We'll flip over here in just a second to check out the overall market. We'll want to see what the overall market's doing, if we're still moving in a sideways direction, which is what the stock's currently doing. But I'm putting some more limit orders out here. What I'm thinking is I might could play this stock to where if we can stay within a 10-cent range where we're bouncing between 9.90 up to 9.99 or 9.98, that's fine. We can buy at the bottom and sell the top as it kind of bounces around while the stock consolidates. I do want to point out, if you look at that lower chart on the bottom of the screen that shows the white line, that's the RSI. So what you're seeing is it's coming out of a high, so it broke into that 30% upper range and generated that red line, and then it dropped back down. So a lot of times what you'll see with that is it'll either drop straight down or it'll kind of consolidate and it'll go for another move up. A lot of times I've found that when you get two red RSI, or if you bounce up to that 30 percentile twice within, say, 30 minutes, the second time it goes up into that 30 percentile range, you'll see a steep sell-off afterwards. So we'll have to take a look at this to see what happens. It's either going to drop or we'll get a second movement up into the upper 30 percentile. The stock's really starting to drop right here, and this is why I'm in a simulator. Been finding that a lot of the patterns that I'm used to trading aren't holding. It's losing the momentum. It's just not typical trading. You know, the fundamentals and the training that I've gone through to be able to trade, those rules are not really holding up. So that's why the markets are a little iffy right now. You know, some of the information I've been reading, heard some interviews from some hedge fund managers where with the uncertainty with the election and with the different policies and trade policies with the presidential candidates, they were pulling the majority of their holdings out from their hedge fund in order to let this election be decided. So once the decision was made on who would be the president, they can make decisions from there if they're going to view the market as a bull market or bear market would kind of be related to who's elected. You know, if you follow this, you would probably guess that if Trump's elected, they're looking for a continuation of the bull, and if Biden gets into office, which looks like it's pretty much what's happening after the electoral college votes, that what they would expect at that point would be a bear market for a period of time, possibly a recession, with trade policies with China and all the terrible trade deals that the Democrats have done over the several years. No wonder hedge fund managers are thinking the markets are going to go sour. And this is kind of a reflection now that it's being in mid-December and it's looking more and more like Biden has secured the presidential election. The market is starting to go a little south already, even before he's in office. So it just goes to show how important it is for the president and the trade policies for those administrations. So we've already dropped more than 20 cents per share on this trade. It's not a very good trade. Sitting on a position with 1,200 shares, averaging at $9.91. We're looking at a loss of about $150. So what we're looking here is we can do a couple of strategies. We can, because we're on a margin account, we could try to hedge our way out of this. There's a strategy to where even if you're in a losing trade, you can wait till you hit the nearest bottom, purchase at that bottom, and as it moves up, you can sell. So you potentially even can make money on a stock that's fallen down over the overall downward trend that occurs during the day. And so that's what you're seeing. What I'm doing here is I bought kind of down at that low, and as it moved up, I've sold some of my shares. So you just got to track how many shares you bought at what price to pull this off successfully. So we'll see how we can still make this trade come out to either break even or still a little bit profitable, even though we're trending down. We just saw basically a 10-cent move up, even though we're in a downward trend. So it's still possible. Don't really recommend this type of trading, but since I'm already in it and I'm in a margin account, even though it's simulated, it's what I'm practicing, what I'm showing you guys. So we'll see if we can do this on this trade. So what I had done a second ago was put 2 limit orders of 800 shares right around 980. The thought with that trade was just to kind of phase out of the trade and get out. But it bounced up and it dropped straight back down. So we're going to kind of cancel that approach, and we can see maybe we'll just make a purchase down here at the bottom. Alright, so I've got 2 purchases down here. There's one at 971, another one at 968. So I've bought 200 shares at each one of those marks. So what we'll be looking for is to sell those at a higher price point. I'm still up to 1,800 shares, but I'm still down close. I'm approaching $300 down now. So this trade's not really working out very well. So what you can see though is I do have a moving average set up, and sometimes you'll get a bounce off of a moving average. I think that moving average is the 10-day exponential moving average. It really doesn't seem like the stock's paying any mind to that. The purple line is the VWAP, so that's also a line you can see bounces off. So we'll see if this stock is going to trade and acknowledge these moving averages as price points to bounce off of. Just zooming out here to give you guys like another picture of what we're looking at. There's a few things you can see here. You can see that the trend for the past 30 minutes, it went up, hit a double peak, and it's bouncing back down. Looks like there might be a small bounce off of the 10-day moving average. Looking at the indexes here. Looking at obviously we're looking at a different stock here, if y'all weren't paying attention. So it kind of looks like we took a bounce off that lower 30 percentile range when you're looking at the RSI chart. So sometimes you can get a good bounce off those. Not sure if it dipped deep enough into it to give it a strong one, but it looks like there might be a bounce off that and also off the moving average. So what I've done is I put a limit order out there at 841. The thought here is that if we can break 840, then we might get a little movement up, maybe 5 cents up, and we can sell off that. We'll see how this goes. If it doesn't break 840, then we'll just move on and look for another stock.